looking ahead the next 5 to 10 years? Obviously, no one has a crystal ball, but what are the biggest risk and opportunities that you're seeing in the multifamily debt market, and how do you think that sponsors and limited partners should position themselves for those risk and potential opportunities?
That's a great question. Yeah, I wish I knew the answer to this,
Yeah.
to see where the market is going. One thing we have seen a lot of is bank consolidation. And to me, this is a little bit of a risk, as some of these smaller banks are getting bought by larger banks, and even middle-sized and larger banks are getting bought by larger banks. It just reduces the number of lenders out there and reduces the competition.
Yeah.
So the less competition we have fighting for a deal, the less quotes we're going to get, and we may have, instead of 5 quotes on a deal, maybe 2, and maybe 3 of those quotes are missing because those lenders don't exist anymore. They were bought by another bank. So it's not a problem today, and in most markets there's enough lenders going around. But in our market here in Cincinnati, there's certainly a lot less banks today than there was 5 or 10 years ago. So that's something that's on my radar. We haven't talked about AI yet, and I think AI will be something that becomes more prevalent in our market down the road. We're starting to see lenders using AI a little bit more. Not yet to make decision making on a loan, but if we start to see lenders replacing people with AI and computers to make decisions, I think that's a risk where it could limit the ability to find capital, because maybe the AI doesn't have the ability to really think outside the box, and look at context and say, well, this is a really tough deal, but SNS or this sponsor, they know what they're doing. They can handle this deal. We wouldn't normally make this loan, but for this group, we would. And I don't know that AI is going to be able to make those types of decisions. So I think in our industry, the people are still very important, and AI hasn't taken over yet. Hopefully it won't. But that's something that's on my radar is, how is AI going to play into our space?
Yeah.
What kind of effect is that going to have on the lending market and decision making? And then something that should also be on our radar is the securitized loan market. We have certainly seen a lot more cracks in that space, not only in office, but also in multifamily as well. And there's a lot of noise out there. It's not going to be another GFC in my opinion, but it's something that I think should be on our radar, where if there are more issues with that marketplace, we may see less lenders out there, right? Some of these lenders might be forced to sell or go under, or just get out of the market as a whole if they're not making any money. So that's something that I think we should look at, but that could also create opportunities for folks like SNS or other companies, as we talked about before. If there are more foreclosures, there's more properties that have gone into default that could create buying opportunities for the right investors. So we're starting to see that a little bit more, and I think that could become an opportunity, but it's also a risk. So some of the other things to touch on that I think are opportunities in the future are, as more capital flows into commercial real estate lending, really as an asset class, to me, more competition may mean a cheaper cost of capital. So, we talked about bank consolidation, but we're also seeing capital coming in from other avenues that wants to get into commercial real estate financing. Certainly on the private side, Fannie and Freddie increasing their caps, life insurance companies are pouring more money into it. So the more money that's playing in the space should create more competition for now, and for the right deals, we should start to see hopefully some cheaper rates. Hopefully we'll see lower interest rates for commercial real estate financing. A lot of that has to do with the economy, what the Fed does, and certainly how the stock market performs. And then I think if the government starts buying more treasuries, if maybe other governments start buying more treasuries as a safe haven, we could start to see treasuries come down a little bit. But again, I wouldn't expect a 2% drop, maybe 50 basis points, and I'm hopeful that we'll get that as well.
Yeah.
And then the other opportunity that I want to touch on, and I'm certainly not an expert in this space, but there's been a lot of noise and talk about Fannie Mae and Freddie Mac potentially going public Right now, they're private entities, and if they do go public, the belief is that their cost of capital will be cheaper, and we may start to see some lower rates there as well. So that could be an opportunity, maybe more lending, lower rates, and that would certainly be great for the marketplace. So, those are some of the risks and opportunities that I see, and I'm sure there are many others that are not even on my radar yet.
Yeah, I should have opened with that question. That was fantastic.